Welcome to Momentum Monday. Today's February 4th, 2024. Howard, how do you feel about the market right now?
Hard not to feel good. I mean, you got pretty much everybody just feels pretty negative out there still, and the prices continue to defy the mood. So what do you think?
Yeah, we're seeing all-time highs for the large caps, the Nasdaq 100, the S&P 500. Small caps and mid caps are lagging behind so far year to date, as it seems that the Fed is going to postpone the interest rates cut until most likely May. And as we know, this is what really drove that big rally in small caps, in banks, in biotechs, since the beginning of November, when that more volatile parts of the market outperform the expectations that the Fed is going to cut
Yeah.
soon. But it seems like they're not going to cut. They're going to wait.
Well, I
And
mean,
why? Go ahead.
well, there's just no need markets at all time. I mean, who are they cutting for?
Exactly. Exactly. There's really no need. GDP growth is better than expected. Jobs number, the job number is still very strong, better than expected. There is still, plenty of deficit spending going on, especially on an election year. So there's really no reason for them to rush until we see some recessionary indicators. And by the time we see them, it's kind of usually too late. But either way, we have new all-time highs. We have mostly positive reaction to earnings. I mean, huge behemoths like Meta, they continue to defy gravity and beat
But,
expectations. And
but they're not defined, guy. Let's go back to where Facebook. It's a really good point, Evan, because you're employed and you know how to employ yourself because you taught yourself how to read the markets, right? These companies, these booms move with cash flow. If we get overlay cash flow, and I don't, just too lazy to do it for everybody here, but you can go use FinChat or CoiFin or any of these companies and overlay cash flow against these companies and realize they're crushing it. And they have so many levers to pull, Meta, Microsoft, because they can just continue to let people go. So while people say the Fed is obviously important, but at the same time we have rolling recessions ripping through the world, right? Including wars, right? So right now millennials are getting their first taste of layoffs at tech companies, right? They're recording them, they're TikToking them, right? They probably were overemployed during COVID and they didn't have to pay back their student loans. And so the world is a little bit cruel right now, but there is a recession going on if you talk to young people because um, they were overpaid for a while
I mean,
for being unproductive.
what's your
And
definition of recession, Howard? It's just,
I like it's such an overused word, like the textbook definition of slow growth for a couple of quarters, but the world is not measurable in one lump anymore. And it's just stupid for people to not follow price, right? Facebook was in its own depression based on decisions that the management made about being avatars and metaverse. And they realized when they tripled down on what they're good at, which is data and social and advertising, they started to crush it. So
in 2022, the entire tech sector took quite a hit just because.
massive, right? And it was a weird hit. I've told some of my readers it was a weird hit because it was obvious that we were going to take a hit, but nothing felt cheap. There was no kind of at the end of 2022, the price action bottomed, but it didn't feel like a bottom because there was no like oomph, right? It was just a grind
Well,
down.
the
But
Fed kept raising interest rates, so the market was discounting a potential recession, which never came. That's why we saw that huge recovery in 23, because the market had no clue that the economy and some companies can thrive in a 5% environment. And
Right, the
those,
textbooks were thrown out the window, meaning if you follow the textbooks, you're just trading and getting tossed around for the last 3 years versus just following the price action. And but again, you and I aren't macro guys. I just get frustrated with this macro chat because in day-to-day life for most individuals, they've gone through way more recessions. They've gone through as many recessions as CNBC has predicted, without actually having one based on the
yeah.
economic, you know what I'm saying? Like it's just
Well,
COVID and there's
talking
been,
about recession sells, right? It attracts attention. So, do you want to talk real quick about like the potential bearish indicators real quick, and then just
sure,
go to the
show us what
the
you're
bull market?
seeing. There's
I
some
mean,
divergences, but tell me what you're saying.
yes, yeah, there's some bearish momentum divergences like RSI not confirming the new highs in the S&P 500 and just market breadth. It's a bit weak, mostly because Russell 2000 is underperforming, and last year the weak market breadth didn't matter at all. Like we
Yeah,
saw basically Russell 2000 catching up, and
yeah,
everyone is pointing out to that seasonality chart where in the first half of an election year the market is kind of flat, and then all the gains are in the second half, June to December. But what if everyone is expecting that, and and actually some people start to front run that? Obviously we're going to have some 3 to 5, 7% pullbacks along the way. Nothing goes up in a straight line, but I'm kind of starting to have the feeling that some people are turning bearish for a 3% pullback, which is okay if this is your style, but there's still plenty of setups, plenty of stock setting up, and plenty of breakouts that are
yeah.
working.
So let's take a look at two charts that may help people understand how bullish it is out there. And obviously, we can change our mind in a couple of weeks. Let's pull up the chart in the video last year, right? Where when it broke out above 400 and gapped up. Remember everybody, so when it did that gap from 300 to 400 in June of last year, right? Everybody was like, oh, it's a bubble. Then go back and look at the headlines there. Is like, we saw it as a bullish gap, right? Because no one was expecting it, right? But everybody thought it was just like the bubble's back, right? And these type of breakaway gaps that aren't just based on speculation, but on real cash flow and orders and technology and growth, you can see those type of gaps, how how the next breakouts generally happen in the
They
direction
don't
of
get
the
filled,
trend.
yes. As you can see, that gap never even got tested.
Never even got filled, right? And
Yeah.
so now let's go look at Meta, right? Which is now the other side of economy. They're the customer of NVIDIA, right? So if the customer of NVIDIA is now going to start seeing the benefit, the biggest customers of NVIDIA are going to start seeing the benefits, which may even be better for the economy, right? As much as we hate Facebook, there is something to say that ad spend may be going up. Technically, Oculus, the Ray-Ban Meta sunglasses. Again, I don't like to talk about the economy, but if you look at that pattern, right, it may not let you back in. The next move over after it digests this for a couple of years may be higher, right? And so looking for the 3% pullback, I think you should be. I don't think you should chase stocks ever. But I don't know what a 3% pullback means if you're going to miss the next 50%. So a lot of stocks are going sideways. Shopify was one that's been going sideways. But again, the direction of the trend continues, I think, to be higher, right? They're the winning e-commerce platform. What else is going sideways? Cloudflare going sideways. So a lot of stocks are digesting big gains.
Exactly. There are quite a few, like especially in the software space, anything related to
Yeah, look at
AI,
Snowflake, right? Like totally, which
NVIDIA's
I'm now long.
things are breaking
Look at
out.
Snowflake, which I'm now long, right? How
Yeah.
can it's basically at all-time highs, okay? Because the bubble sellers are gone, right?
Yeah.
And so you're basically at all-time highs, right? The people that want to own it, own it. and everybody that wanted out is out. It's expensive. Everybody kind of knows the landscape. But Snowflake, even StockTwits is thinking of moving all its AWS servers over the lake on Snowflake. So this is a brand new world. Look at Elastic, right, which survived the onslaught of Amazon, right? It's another stock that we've been talking about, right? That gap, again, it's all-time highs. I know it doesn't look at all, like all-time highs, but everybody that wanted out is out, right? And there's a new world for Elastic. Amazon, they beat Amazon, right? That was the worry. Amazon just, it's not, Amazon's moved on. They're not going to beat Elastic at their game, right? It's another company that Snowflake powers, I mean, Elastic powers StockTwits search. Okay, then let's look at Spotify, right? Wasn't Apple supposed to kill them, right? So again, this is basically another stock at an all-time high, 2 3-year highs. And Apple's going to disappear from this business, right? Look at this, look at the market cap of Spotify.
Yeah, it's a 40.
So if Microsoft, if Apple eliminated Spotify, you know what that would do for Apple stock? Zero, right? So in the end game, Apple's going to move on to virtual reality and augmented reality, and Spotify is going to win audio and video, right? And so Spotify, those that bought it, like we were buying it at 100 based on the valuation, 40 billion for Spotify is not cheap. So now you have to start looking at valuations. But could it be $100 billion brand? Absolutely. Right. So now you have to just measure what your risk return is on where you own these things. So Spotify is another winner. Uber, right, which with everybody's laughing stock, as we've been talking about since the 50s, is now at all-time highs. Right? Who's going to be able to compete with Uber in a non-ZERP world? So valuation is one thing for sure. Don't get me wrong. Like I don't know how you got to do your own work on your comfort with like upside risk reward, but Uber has no competition. And look what Lyft's doing. Goodbye. So Lyft's valuation is Uber's margin, right? Like it's not even worth they stay open.
5 billion versus 140 billion.
Isn't
Wow.
that incredible? And like no one's talking about it. So it's over. That race is over, and Uber is going to be like an Amazon in many ways. Now it's not cheap, and I don't know how to value the fundamentals, Ivan, but Uber's with us forever. Same with Airbnb. So the Web 2 bubble is over, and the survivors are going to be incredible. And then you add Web 3, and you add Web 4, whatever we want to call it, and you add
Uber, not Uber, Airbnb is setting up here.
yeah. Again, I don't love the business. I don't love the company. I don't use Airbnb. I don't like the fact that everybody can be a landlord, but it's my opinion. I'm just saying they're not going away. They're not going away.
Well, you also never in your life, you've never had the hookah shoes or UGG. And then look what deck.
But I own the stock, right? Like it's part of my
It's up like 760 times since 2000. Like incredible. Like that's annualized, that's like 35% per year. Like the type of growth that they've had is just unbelievable for just a shoe company.
Not just a shoe company, they're like an LVMH of America, right? They're like the American
The
version.
shoes are not that expensive. I don't know why.
Meaning Americans don't, the middle America, that's their brand, right? They shop the Decker brands, right? It's kind of a hidden luxury item for Uggs, and believe me, it's not cheap, all their stuff. And so they're the equivalent of what LVMH or
Their
Wolf.
execution has just been
Incredible.
really well. I mean, look at this.
Great knack for buying
360
brands and rolling them in.
earnings to expected to make $27 earnings.
And if I go to StockTwits, so let me just show you. I'm just going to quickly look at StockTwits and to see how many followers Deckers has.
All right, let's go to stock.
It's 2,000 people following the stock versus Nike. Hang on.
It's not a sexy stock, yeah.
Nike has 107,000 followers. So that's another way I use.
I mean, yeah, I think the other day I shared something on StockTwits. Oh, right here on Deckers. Look at this. So Deck. So since 2000,
Correct.
Spice up 260%, Nike's up about 2600%,
That's
Nike's
a
up
great tweet.
76,000%. So I
And,
mean, Nike
and,
is down 10 times better than the S&P, but Tech is down so much better. Like it just,
That's a great, and Ivan, you can now do all that in FinChat, but then when you add in how many followers on StockTwits, you get a sense for how underfollowed it is, right?
yeah. Where can you see that?
If you go to deck,
Oh, just clicked it. Okay.
yeah, click deck, and you see how many followers it has, 2,400 up at the top here.
Oh yeah, 2,400. Yeah.
Okay, now type in Nike. So you understand that, like, I love to use high relative strength stocks, and you have 100. So it's
108,000. Yeah.
over what, like, everybody knows Nike, right? So you want to find high relative strength stocks that no one cares about. And that's one of my, kind of combining IBD with StockTwits data.
Mhm.
Why aren't you on, you cheap bastard, you're not on the ad free? I gotta get you set up right now. Are you not on the ad free of StockTwits?
I am on not free on StockTwits.
Okay.
I am.
So there's a couple of use cases, but I don't know how Nike gets out of their way, right? What's the swoosh can't beat an onslaught of 1,000 brands, right?
Nike is worth as
Mini
much as
luxury.
Uber right now, 150 billion. Yeah.
So that's a good question. Would you rather own Nike or Uber based on where we're
The
at?
next 10 years, probably Uber, but who
Okay.
knows? Yeah.
So that's how you start making decisions with market cap, with understanding, margins. Um, and you can understand by looking at Nike and Decky why Deckers is sneaking up, right? Nike is an amazing company, but they're pushing one brand, one swoosh. And Deckers is tapping into the youth, which likes being independent and having their own brand choices. And what is it? Only a $20 billion market cap?
23 billion market cap, but what's more interesting is that it's only 25 million shares in the float.
So it's a small float.
They've been buying back their shares. So actually the float has been decreasing. So they're using the same strategy that AutoZone has been using. They're just buying back their shares.
Okay, well, it's working.
It's working,
I'm
definitely.
not a fundamental analyst, but as a price junkie, there's been no sell signal the last 4
But
years.
usually most companies float increases over time as they issue new shares for management.
Well, and then you look at tech, which just does these they give everybody shares. Yeah, I forget what they call it. Um, so anyways, the market's just in a much stronger position because we filtered out the ZERP riffraff. It was fun. 2022 was brutal. And now you come back with leaner, meaner,
Yeah, I
tougher.
mean, all of those tech companies at the end of 2022, they just decided to cut
Stop them.
20% of their workforce. And they're obviously they became much more productive, much more efficient, and their earnings went up. And the market rewarded that, right?
And that's what I'm saying about recession. A lot of people are going to be displaced here, and they don't have the skill set, right, for the next boom, which is going to be about marketing, sales, creativity. That's a very narrow group of people that are good at that versus you can go to school and get an engineering degree. But people are born salesmen and it's very hard to learn sales. It's very, so we're entering a creativity area, which is not the same as a productivity area where everybody can get the skills and learn to code and do these other things. So it's a pretty good market to sneak up on people.
Okay, so if you were, let's say, 22-year old, what would you do right now?
I give the advice because I can't code and I'm not good at many things to other people. I'm a salesman, and so there's two types of people. There's like analytical people like you who you know learn, spend your 10,000 hours learning a trade, and you were smart to learn the language of the markets. Okay, and that interested you from a young age, and you like it, so you're pretty lucky. For most people who have to make a decision, you know, there's nothing wrong with learning how to be an engineer and learning the code. I don't think that there's two languages I would learn to code and learn the markets, right? And then on the other side of it, if you can't learn either one of those, be a salesman, right? The world always needs good salesmen. And the trick for young people is to find great products to sell. Don't sell shitty products, sell good products. And that generally means taking lower salary, lower job title, and just getting aboard companies that have great products and being in the sales side. Because if you go to work at the sales side of NVIDIA or Meta or Google or wherever you're going to go work in sales, those products are generally in demand. You're just going to get better training, be around a higher quality of people, and use all the best services and tools to make you a good salesman. So that's kind of how I would do it.
Okay. So you already mentioned that Meta being one of the biggest customers of NVIDIA, they're crushing estimates, right?
Yeah.
Then let's talk about like TSM. NVIDIA is the biggest, one of the biggest customers of TSM. TSM also crushed earnings estimates, gapped up, and is making higher lows. Also, I mean, it's a huge company. It's like a $600 billion company.
Wow.
Also, ASML, TSM, Taiwan Semiconductor, they're they're the biggest client of ASML, which they make the semiconductor machines. Also gapped up on earnings and pushing
ASML basically is the Netherlands, right?
the
Have they?
most important companies in the world, Howard, crushed earnings estimates and gapped up.
Yeah, the other reason I like ASML, and I've been talking about it, is we're in a trend of semiconductors, and ASML has 12,000 followers, right? NVIDIA, what does NVIDIA have? 500,000 followers. So ASML, which is almost as big a company, I think. What's the market cap on ASML? Hang on.
Um, 350. So it's not small. Yeah.
It's not small. Okay. So it's basically the whole, okay, it's a Dutch company that no one's ever heard of that's basically Boeing meets chip maker. So they have orders going out for the next 20 years, right? Because they make the products that make
The
that
equipment that makes chips, yeah.
yeah. Okay. So my friends in the Netherlands have been talking about this. This is kind of their Amazon, right? And obviously it's not subject to tech. It's not immune from tech pullbacks. You can see it was just as nasty.
Yeah, in 2022, they also went down more than 50%.
So in a tech wreck, they're going to be affected because of future orders as well. But now you have to look how quick it bounced back, meaning it bounces back with tech very quickly as well. And the reason I think this is interesting is because no one follows it. So you have the same kind of price action with less amount of daily volatility because it's not followed as much. And it's wow, what a great stock.
I mean, longer term is just insane. It's like it's a
Yeah, so people talk about Europe being the laggard, but Novo Nordisk is Denmark.
well, they have two companies that have done really well. Yeah, the
Yeah,
weight loss and
ASML,
yeah.
and you've got Mercedes, obviously. So I'm saying like
Perez hasn't done well, but Ferrari, like they're on the they keep making
Ferrari.
all-time highs. I don't know why, but I guess.
Yeah. So there's a lot of good stuff happening in the world at a very high level. But if you drill down to the micro, it's easy to get caught up in the weeds of the headlines and the misery. Another stock that I keep talking about is New York Times. Speaking of misery,
All right, let's see.
which interests me because it's a completely new business, right? It is now a subscription company. It's a tiny market cap at 8 billion. It's probably the best position.
8 billion, yes.
Yeah, best position media subscription business. Can you imagine if Elon Musk would have just as much power as he has owning Twitter if he had bought the New York Times, right? And just made the news what he wanted to make the news.
Yeah.
And a lot less
Probably he
aggravation.
could have bought it for 16 billion, right?
What's that?
He probably could have bought it for 16 billion instead of 40 that
I
was.
could have brought it for 10. He wouldn't have to pay much of a premium. And remember when he could have bought it was back when it was in probably 6 billion when he bought Twitter. So I think this is an interesting company to follow because it's kind of on the sentiment of how the world looks at the US. And they're love them or hate them, and most people hate them, which is fine, but their business model is not to be hated, right? If you break out their subscription revenue and their ad revenue, this is a subscription-based media company, right? And they're going to triple down on subscriptions as much as that means the news may get shittier and shittier. That's just the business that they're in, is selling subscriptions, and nothing sells subscriptions more than fear and greed. So I don't think it'll get better in the media side, but it's going to, I think New York Times is a proxy for how to invest in media, which is subscription-based businesses. So you can take away everything else in that chart, that stock's at all-time highs because it's a script. It's, if you go to the monthly, yeah, you can take away all if that stock breaks above 50, it's an interesting company, and it's probably in play by a
Yeah,
billion
it's setting up,
someone.
setting up. Look at those lower highs making, tightening.
So
The
I think it's interesting. And the other optionality on New York Times, Ivan, is their lawsuits, right? They're suing tech companies, and I think they have a good case.
Yeah, they're suing. What was that AI startup?
Yeah, because
ChatGPT.
it's
Yeah,
our data. So again, there's lots of interesting ideas at all sides of the market right now,
yeah,
for every type of
I
investment.
agree. There are companies, stocks breaking out, but there are also others setting up. So there's definitely enough material for both bulls and bears. I mean, I see more on the bullish side, and so that's
Yeah,
where I'm focused.
I'm extremely optimistic. I don't know if I'm bullish or bearish, but the people that I follow are moving chips into the market. The people that I trust and follow are moving chips into all levels of the market, right? And at the same time, you have what, record amounts of cash on the sidelines. So
You have six
again,
trillion dollars in money market funds. So once the Fed starts cutting rates, and
I don't think they're gonna. I don't just don't think they need to cut. They should
you
only
don't
cut.
think to, but they will starting May.
Well, that's a good sign. I'm saying they have ammunition at their back.
And then maybe finally, when they start cutting, maybe at some point we see some rotation into small and mid caps. I mean, small caps, they've been underperforming, but they're still holding above their rising 50-day, which is, it's not a bearish market behavior. I mean, obviously, if they break down below 190, probably we see some more volatility here and maybe build a new base above their 200-day, which is like around 180.
All right. All right. Good work. Thanks for holding the fort the last few weeks.
No problem. See you next week. Bye.
See you next week, everybody.